Let's continue with some nice charts, talking technical on again, and let's look at Royal Dutch. The guy that asked about it was John, and John is saying that he would like to invest in some oil stocks. Now, John, if I look at this chart, it looks like this poor company got huge problems, but there's something interesting on this chart. That means we've seen a sell-off all the way. Let's have a look here. Let's just go back. Can you believe it? This company was trading at 37 US dollar in 2018. Now it's trading at 13 US dollar. And what I like about this stock, John, is that it fell off a cliff. The oil price sort of recovered. And then when the oil price just pulled back a little bit, it fell all the way down to the previous low. What I like about it is the following, and I'll tell you why. This is this line. That means we've got a low there, got another low there. That is what we call a double bottom. Remember, this is a weekly chart. And the first tiny sign of strength will be when $13.39 turn into a support or attract buyers. Why do I say that? Because when I see that, I know that I've got a tight stop loss of $11.99. Let's call it $12. So it's not a huge stop loss. And where will this double bottom come into play? This double bottom will come into play when this line turns into a resistance. And that will turn into a support. And that will be at $19.16. And what is the beauty about it? If it really starts to get going, and if I use that bottom end to where the resistance are for the double bottom to come into play, I use just a simple extension, it can take the share back all the way to $26.50. Well, John, I think this is a nice chart. It's maybe a little bit early to say that it's going to go. What I like about it, it's the previous test of the bottoms. We're seeing almost the start of a higher low, the first one, and that will be positive. You've got a nice tight stop loss. You've got a huge consolidation. And what's the beauty? You've got an oil price that they're protecting that it doesn't drop even lower than maybe I see the Brent oil always go to 37, 36, and then the buyers came in and supported. And OPEC is also supporting it by cutting production. So I like this chart, maybe early days, but with this tight stop loss, this chart can maybe benefit you in time to come. Rashid asked about Lupine. Let's have a look. This stock is one of those favorites, and they are just pumping money. Everybody is saying that. And Rashid, if I look at this chart, from April, $531 US, it had a beautiful rally. And remember, this is also again a weekly chart. But I'm starting to see sort of a loss of momentum. And after this steep rally and another rally, look at this. And this makes me a little bit worried. I look at that line. Let's just draw it incorrectly. There you are. We are on the brink of testing a very important support. Now, what usually happens is we in technical analysis always believe if a line gets tested maybe once, 2, 3, 4, 5 times, when it breaks, that support breaks, you usually see a quick sell-off to the downside. So Rashid, for me personally, I will not buy Lupine, and if it breaks 906, I'll be very nervous because it will then mean it can easily sell off and we can see it much lower than where it is at the moment. Let's look at Amazon. Babu is asking about Amazon. And remember, Amazon is that one of those super companies that nothing can go wrong. If I look at this chart, what do we see here? First of all, we see a stock that rallied from 750 to 3,250. Nothing can go wrong, but what is important? Let's just have a look here. There is what I see, a head and shoulder formation. There's the left shoulder. There's the head. And there's the right shoulder. We're busy forming the right shoulder. And where's the neckline? 2,931. Babu, I'll be nervous. I don't know if you want to buy it. You just asked about the stock. And if you look at that space from the top there, from the top of the head to the neckline, and if I extend it to the downside to get a target, here you are, then this company, and I always call it the king of the market, can go to 2,570 Rand. That brings me to a very interesting point. A lot of these companies that's in the Nasdaq is favorites of the market, and it's been favorites of the market for a long time. And when we're going to see a shift, and we don't know when it's going to take place, a shift out of information technology, maybe to value companies, we can easily see that these companies come back quite a lot. So be nervous. Well, let's have a look at Bitcoin. And Jolly asked about Bitcoin. And Jolly said, there's one thing that we must remember. Bitcoin outperformed gold in these bad times. Well, you're quite right. I mean, it's rallying all the way. And it wasn't long. I mean, March, it was around $5,000. It's now $13,600. And Jolly, it is a jolly price here. It can go higher. And why do I say that? I'm going to use this trend line. This trend line tells me that the momentum is clearly to the top. Everybody is happy. It's just one thing that worries me is this break above this resistance line. There was a rising wedge developing, and the stock rallied above that. That sometimes we see it as a false break. And remember, we had almost a rally in a matter of weeks from 1,061 to 1,357, 13,057. So it can easily come back. And for me, I will be nervous if it comes back into this 12,677 zone. If this line breaks at 11,629, it can easily go back to 10,100. So Jolly, it is a good share at the moment. I think it's maybe a little bit too late to buy into it now because it had a nice rally. So I will just sit on my hands for a moment. Well, let's have a look at Reynolds. Of course, sorry, Anna asked about Reynolds. I don't think it will because this is a consumer product. Well, if you look at it, Anna, the share fell off a cliff, highs, lower highs, all the way, and it's trying to find its feet. But I don't want to believe this because what do we see? Every time that the stock gives you this little bounce, there's some sellers coming in. So I will sit at the moment. I will not touch the stock. I'll give it time to actually show me what it wants to do. Now let's have a look here. I will only get positive if it breaks this line, but that's quite a while from here. At the moment, I will just sit at my hands. And you know what's important here? It's sometimes good or a very wise decision to wait. Because look what the stock is telling us. It comes down, gives a rally, comes down, gives a rally, and every time there's lower highs, and every time there's some sellers. So I want to see that this share is showing this kind of formation. A low, a higher low, take out the resistance, turn that into a support, and then a rally. So for the moment, Anna, I will not touch the share. I will leave it, and I will just leave it alone. Let's have a look at Kraft. You asked about Kraft. Kraft Heinz is also one of those favorite companies here. And there you are, what I wanted to show you. I analyzed this share for somebody else earlier in the week. And what do we see here? We see a massive inverse head and shoulder developing, almost like gold many years ago, where everybody was just watching a inverse head and shoulder for a long period of time. And there you are. There's the left shoulder, there's the head, and there's the right shoulder. We're busy forming the right shoulder. And only above this neckline, 36, 34, we can see that it can break to the upside. So for me, I will wait for this neckline to turn into a support before I rally or rush in. And if I look at it, there's my projection from the head to the neckline. And if it plays out, it can maybe take it all the way up to 44.40. For me, quite simple. Wait for this neckline. If you buy above the neckline, make use of a stop loss. Not that, well, I'm going to give a tight stop loss, 33.76. For me personally, in this kind of market, I prefer stocks building on consolidation, making higher lows, working to break to the upside than buying some of these other counters it rallied massively. Let's have a look at Mastercard. Avi is asking about Mastercard. Now, if we look at Mastercard here, and remember this was also one of those favorites. I mean, everybody was buying stuff on their Mastercards over the Corona period when everybody was in lockdown. And look at the stock. It came down in April, it rallied all the way up to the top, and suddenly it lost momentum. And look at it, there you are, there's the trend line. It's a break of a trend line. This is a weekly chart once again. There you can see, and where, oh, whoa, whoa, there you can see. Now, I cannot be bullish about this, and the reason why I'm not bullish, Avi, is the following. Look at the stock. If I draw that line in there, what do we see? We see a break of a trend line. It goes up. It cannot make a new high. That is in negative. And it touches almost this line, and then it collapses. Yes, so we can see a relief rally. While it is moving below this trend line, I will see it as negative and I will not buy it. So it's the same with Reynolds, where we actually need a consolidation and a break to the top. For me, I'm a little bit nervous. I think Mastercard just rallied way ahead of itself. It's coming down now. It's probably going to give us a nice consolidation. And only then we can buy. Just remember, this was always one of the favorites, and maybe we need to move to the value stocks and leave the favorites a little bit alone, unless they come out with beautiful results and they prove us all wrong. Well, if you look at the markets, we'll know in a week or two from now what did Mr. Biden or Mr. Trump did to the markets. Well, hold your horses. We're going to see a nice, big, rough ride on volatility. Well, enjoy the rest of the day and we'll talk again.